Hey everyone, welcome back to my channel. Today we'll be diving deep into the Google stock. I'll walk you through the latest news, Google competitive advantages, its financials, valuations, and so on and so on. And in the end, I will disclose my opinion if Google is still a buy for the investors in 2025. Whether you are a beginner or experienced investor, this video will help you to understand the full picture of investing into the Google stock. So the latest news about the Google are really bullish, I would say. They became a very serious competitor for the ChatGPT, especially in the image generation, video generation, and so on. And the release of Gemini 3 has pushed Google ahead in AI battle, and the downloads amount in October increased up to 650 millions from 450 millions. So it's a huge jump, I would say. Google's moat, I think, remains really strong with the dominance in Android, advertising, YouTube, and cloud solutions. And also Gemini now is really taking a leadership like it's growing much faster than ChatGPT now. Also Waymo is showing impressive growth. They have already more than 100 million driverless miles and they are operating in 4 cities in United States. So Google value in my portfolio is 9% and I own Google only for 4 months, and you see in 4 months performance was really good. It's much stronger than all of my other stocks, to be honest. This is probably the fourth biggest position for me. And if I will see some correction here, I will definitely be adding more. Let's start from the financials as always. And we see that almost all the time Google was growing in double digits. And of course, 2016, 2017, and 2018 were like hyper growth for this company. But even now, its growths in double digits, like 2023 and 2022 was almost double digits. 2024 is a huge increase, I will say, from the 9%. And if we will take a look into this year, we see that it's already higher than 2024. And keep in mind, earning report was not published yet. So I believe the 10% growth is kind of must here, maybe even more. And if we will take a look into the net income, yeah, we see it was consistently growing except 2017 and 2022. It means that the company was still net profitable, but the profit was just smaller again. And if you take a look into this year, TTM, the year is not ended yet, and we already are 24% up. So I believe we can be even 40% up in net income. Also, if we will deep dive into the diluted shares outstanding, we will see that from 2018, Google started to buy back shares. So it's a good thing, but I prefer when the companies are buying back shares when they are cheaper. So if we will compare total assets to the total liabilities, we see that assets and liabilities are simultaneously growing, but assets are much higher than liabilities. And we see that the growth of the assets and liabilities are pretty same most of the time. Yeah, sometimes the liabilities were faster when they were investing into something, probably. And then it's basically the same. Now we see that the assets are growing faster than liabilities. Also, if we'll compare the debt to the assets, it's really, really small. And let's just randomly check if the current assets are higher than total liabilities, not the current liabilities, total liabilities. And they are. And this tells me that this balance sheet is really strong, and I love that. The free cash flow is not so consistent, but they are always positive. As you see from 2018, the story shows us on the like 7 years here, but they are always positive, and overall, they are going up. So if we will dive into 5-year scenario analysis, what analysts are thinking, we see that the number is really extraordinary. They think that the price will be about 784. It's 144% growth. And the base case is about 47% growth. I would say that the base case of analysts is similar to mine goal. Mine goal is between 500 and 550. But if it will grow so fast and it will come up to the 784, I will be really happy with that. Low case is a nonsense in my opinion. Even if the price will go there, it will stay there for a really short period of time. I believe if the analytics and other investors will see this discount on Google, they will be buying it like crazy. Or maybe they will just hate the stock for a while, as we already seen it, and sooner or later it will go up like a rocket again. And let's dive into valuation now. And as you see, the PE is 31 and 6. I would say it's a little bit high or maybe fair valid for Google because it's a mega cap and it still grows in double digits. So I don't think it's overpriced, to be honest. Yeah, they have such a good moat, so it's difficult to beat it, and some premium is fine here. Usually, for the companies which don't have a moat, I would look about 25-20 PE, but here it's a different story. Forward PE is 28 and 6. It tells us that they're still growing, but I would love to see it a bit lower. Yeah, like 25 would be perfect for me, I would say. And earnings per share growth was 32% this year. It's huge number, to be honest. And the year is not finished yet, and I believe it will be about 35. Next year, it's about 5 and 7%. It's slower, but can be changed, I believe. It's a little bit unpredictable for the company like Google, which are doing so many things. But yeah, even if it's 5 and 7, it's still a growth. It's good, but could be better, I think. Yeah. EPS next 5 years, it's about 17%. It's okay. It's not great, I would say. It's fine. And we need to understand that Google is a giant company, and with years, the growth must slow down. It's not possible to grow the same way when you're so big, at least in percentage. Gross margin is not super high for the software company, but if we'll take a look into the profit margin, it's 32. So for the gross margin, 60, profit margin is really great, 32. And I can say that, for example, Meta has about 88, I think, but the profit margin is not much higher. So I would say it's really great. And sorry, we missed the price of free cash flow, and it's 53, almost 53. And it's a bit high for normal stock, but for Google, it always was high, I would say. It's getting lower, but it's still not where I wanted it to be. But to be honest, I see how the free cash flow is growing all the time, and I really like it. So I don't care about it so much, but of course, I would love to see it about 40 at least, because the Google is still growing company. Yeah. So if we'll take a look into the quality metrics, we see like the financial health is 10, profitability is 9, growth outlook is 8, analyst sentiment is 9. Just a year ago, everyone was hating Google, and now when it's growing, the analyst sentiment became 9. So it's usually like that. When everything is growing, you're buying on the peak, you love it, but when it starts to fall, everyone starts to hate it. But it should be opposite. When the great stock is going down, you need to be happy and buy it, and then sentiment should become even better. But analysts are different kind of people. Yeah, they are working for the crowds, we can say. So yeah. So let's talk about Google pros and cons now. First, we'll go with pros, then with cons, and of course, first pro is AI leadership with Gemini gaining market share. And we see how rapidly Google started to grow and going even beyond the ChatGPT. Strong financial and robust revenue growth. We saw that Google is growing in the double digits, and it's really great, and I love that. And we saw that this year they're growing even faster than in the last. So deep mode with dominance in search, advertising, Android, YouTube, and cloud. And that's true. They have this huge ecosystem which helps them to keep the mode. The search is still number one. The amount of searches didn't reduce from the time of the OpenAI started the ChatGPT. Advertising, they are one of the dominant market leaders with Meta. Android, everyone uses the Android phone or iOS. There are only two players on the market, and Android is definitely dominating here. YouTube, you can say that YouTube is not so good as TikTok or Instagram. Most of the YouTube videos are much longer, yeah, and the niche is really different here. And lastly, cloud. It's a really great thing. They're growing really fast. They're competing with Amazon and Microsoft, and they're starting to grow faster than both of them. Innovation pipeline with moonshot projects like data centers and space and AI glasses. It can be pro and con. For me, it's pro because I like this experimenting part when they're trying to do something great, and even if from, let's say, only 1 of 10 projects will be succeeding, it probably will bring 100 more X money than they spent on this 10 projects. Massive cash flow generation and strong balance sheet. We looked into the financials and we saw that the cash flow is always going up. The balance sheet is great. Liabilities is much lower. So it's really great company from the financial part of view. Waymo growth and safety records in autonomous vehicles. The potential of Waymo is really great. Now they are only in the 4 cities in the United States. Even if they will stay only in the United States, the potential of growth is huge. When I tried Waymo first time, they were only in San Francisco. Now they're in LA. They are in New York, I think, and in the Texas too. Cons are, as always, for the mega cap, we have regulatory risk from ongoing antitrust fraud. If you're afraid of that, probably you don't need to invest to the mega. All mega caps has fines, courts, and so on and so on. But sometimes they will win, sometimes they will lose. It's just part of the game. Fierce competition from Microsoft, Amazon, and OpenAI. That's true. They compete with Microsoft Cloud and probably in their office, but of course Microsoft wins in office but loses in the cloud already. Amazon, they're competing in the cloud as well, and ads, I would say, but ads on Amazon a little bit different, their internals. And OpenAI, yeah, we saw how Gemini is just getting better than ChatGPT. So we will see how this competition game will play out. And to be honest, I really love when there is a healthy competition. Then the company is motivated to grow. They're motivated to make experiments and just be a better company. High valuation make it less attractive for the short-term traders. That's true, but I am not a short-term trader in this situation. Heavy investments in AI and cloud require significant capital expenditures. Flow growth was slowing down sometimes, but I believe they will figure it out. Economic sensitivity in advertising revenue. This point is what I agree very much, to be honest, because, for example, meta advertisement works for me much better. Amazon is internal tool, which is really great for the products. To use Google, when I used it, it wasn't so good and it's a little bit expensive, to be honest. So in conclusion, is Google remaining a buy? For me, it is a buy, but maybe a moderate buy now. If I will see the correction in 10%, I will be buying much heavier, definitely. I just didn't have a chance to buy as much stocks as I wanted. I would love to have Google as the number one stock in my portfolio, to be honest. But they were growing so fast, I didn't have a chance to buy the amount of stocks I wanted because my capital is not so huge. I'm just a small investor from Lithuania. Yeah. However, there are risks. If you are afraid of ongoing antitrust scrutiny or are afraid of the fierce competition, you probably need to avoid such stocks like Google. But Google has a very diversified business. For me, even if they lose, I don't know, in AI, they are still good in other things. And this reduces the risks. If, for example, OpenAI will lose this battle, they will have really big problems. But Google, they will survive. If you find this video helpful, please like, subscribe, and leave a comment. It will help me a lot. It will motivate me to grow and make new videos. So yeah, see you in the next one, and remember, keep growing.